Like always, we have the Wipro top management with us to decode the numbers of the quarter gone by and the commentary for the road ahead. Thank you all so much for taking out the time and joining us. Abid, starting off with you, largely inline set of numbers. The only issue and something that we're quizzing you in the press conference also was this cautious guidance for the next quarter. Considering seasonally it is a stronger quarter for Wipro, has always been. So what really has what's really gone out of the way in this cautious optimism for the next quarter?
So Rahul, first of all, Happy New Year and thanks for having us on the channel. Guidance is always a range, and both the cautious and the optimism is built into the lower and the upper end of the range. There is a lot of uncertainty in the environment, whether you look at the macro economy, there is uncertainty. If you look at the geopolitics, there is uncertainty which impacts business, whether it is, the North America, US, Mexico, Canada, or you look at US, China, or if you look at what is happening in the Middle East, different automobile sector gets impacted with USMCA uncertainty, or a lot of consumer and other businesses get impacted with US, China, or oil and gas gets impacted with the Middle East. So all of that needs to be baked in because it's difficult to predict how some of these things pan out. There are good news also in the uncertainty going away. For example, the Brexit, which
it's now finally behind us after all the dilly-dallying.
Exactly. So there now we are seeing, because businesses like certainty, they can deal with any answer as long as you know what the answer is, and that is what has happened with Brexit. But in some of the other places, still there is a level of uncertainty which is reflected in our guidance.
Works well. Jatin, coming to, one way or the other, everyone's going to ask you about margins and what you're really going to do to improve them going ahead. The last 3-4 quarters, stable set of margins. Of course, the rupee depreciation, the crosses have really helped you. But what other levers do you really have with the ICICI deal, the ITI, all of it behind you? What other cost optimization levers do you really have to continue the sustainable ones that you have?
So there are multiple levers. If you see our track record, we have delivered in a narrow band. We started with 18.4 for the year, then 18.1, then 18.4 again. And if I look at go forward, I see utilization. There is a significant investment that we have done as we train our next generation of engineers. We have significant opportunity in automation. We have done, I would say, industry-leading work vis-a-vis how we deploy automation in our run businesses. We also see premium in pockets for digital and other technology in pricing as opportunity. So we will, this operating margin is finding pennies wherever you can find, and we'll continue to find those.
And you'll continue to really focus on that. Bhanu, coming to you, usually the time of the year when clients are really finalizing their IT budgets, still I know is a work in progress, but what's the sense that you're really getting for this calendar year? Does it really look healthy, even as, Abid pointed out to those geopolitical issues, the larger macro uncertainty with the US elections also now approaching? How are client conversations panning out?
So, we talked to you about what the environment looks like. Environment uncertainties remain same. So the demand environment has not changed dramatically. It has not become weaker, nor it has become too strong. But a couple of points I definitely want to mention to you, right? If you look at all the digital propositions that we have, the resonance with the customers has increased significantly, both in terms of customers who are starting on digital journeys, as well as the customers who have become long in the journey and trying to industrialize the digital journeys. So our propositions are becoming that much stronger. The 4 big bets that we have taken, digital, cloud, cybersecurity, and engineering, those 4 are really the most important activities for most of our customers today. Our investments in the markets, right, both in our mature markets such as US, UK, and so on, as well as in the markets that are growth markets, that we are increasing our coverage. So the environment, as it remains uncertain, as Abid mentioned, right, we do see our conversations becoming that much richer with our customers, and hence our pipelines looking stronger.
All right. Saurabh, I won't ask you about attrition. The number really looks under control. But utilization levels really, are you really increasing the bench size, so to say? What's happening on that front? Because your utilization clearly seems to be dropping. Would you really want to call out the factors, even as you go out aggressively hiring on campuses?
So utilization has come down this quarter, and there is as Jatin alluded to, it's a key driver for us to look at our margins. I think there are three reasons why utilization has got impacted in this quarter. First of all, as you know, we onboarded about 12,000 freshers this year, so that's it is double what we had done last year. So that is making an impact. Second is you see a sharp drop in attrition happening. So there are lesser people who have left us, and you plan for hiring.
And you're happy about it for sure.
And that will play out for us in the coming quarters, because that's going to help us in our fulfillment and driving growth. And the third is the seasonality with the furloughs in this quarter, the leave in this. So if you put all these three reasons, you're seeing a drop in utilization, but it's a key driver, it's a key focus area for us. And we believe it'll help us improve utilization and help us both in driving a growth as well as driving a margin. So I think both we want to focus on.
So you do have your eyes and ears on
Absolutely.
utilization after having cracked attrition. Really. Coming back to you, Bhanu, if you could talk about BFSI, volatility really continues, but also there's a sense of optimism in the commentary saying that as far as newer deals are concerned, digital is concerned, we are seeing. So how long before we really see those issues bottom out? Because capital markets, Brexit now behind you, how will BFSI really pan out?
So BFSI has been a good growth driver for us last few quarters, if you see, and our focus on BFSI has been, like you described, on participating in the customers' digital journeys, right? And our investments are really paying off very well. If you look at the kind of activity and the work that we have done for our customers, primarily digital, and different kinds of digital work for our customers as well. As much, again, I want to repeat the same thing, that we do see the uncertainties in the environment, but at the same time, our conversations are becoming that much richer with our BFSI customers as well.
So things are getting better. How long before they bottom out?
I would not be able to put a time frame on it. Then I would be doing a different job. But right. But our conversations are definitely richer, much richer right now.
All right. Coming back to you, Jatin, you spoke about digital side of the business that Bhanu has alluded to. Abid has also spoken about. Considering you are entering a lot of these newer areas and digital has really come out as a growth driver of engines, when do we finally see those really reflecting in the margins really? That's an added lever clearly, right?
Absolutely. I think there are what I call business texture benefits of digital, which are short cycle businesses. These are premium price businesses. These are your opportunity to continue to work with customer as you work through the scope, and you are not signing up a 5-year deal with committed cost over the course of period. So digital has many good things from both margin as well as working capital standpoint. It is still evolving. One will have to wait and watch as we go forward. There are mismatches between demand and supply. You have certain constraint on certain skills, and therefore you will have to pay extra premium versus what you can generate today from the market. And over a period of time, as you train your own workforce, some of those demand premium you will be able to capture in your P&L. So I am quite excited about it, but I must also say that is a journey over a few quarters and maybe couple of years than next quarter topic.
All right, a couple more quarters before we can grill you a lot more. But lastly, to close it with you, if you could elaborate, do you see the next financial year really being a year of a turnaround for Wipro from a growth standpoint? Brexit is behind you. Macro uncertainty, of course, not under your hands, but you're optimistic about how client conversations are panning out. Will the next financial year in that way really stand about as a year of turnaround for Wipro?
So, talking about Wipro specific issues, I think we're past all of the restructuring investment that we were supposed to across the verticals, across the horizontals. Today we participate in over 160 reports. We are leaders in over 100 of the analyst reports, which are all around various capabilities that we take to our customers. Our customer satisfaction is at an all-time high. Our order book, one of the highest order books last quarter. So I feel quite comfortable from a Wipro standpoint. When we look at the macro uncertainties, and sometimes you may be in a part of the portfolio where the macro impacts more than it impacts less. For example, today in our health business, we have a significant exposure still with the Affordable Care Act. And that comes, we may get impacted more compared to some of our peers. And hence, the competitive growth rates are also dependent. For example, when last 3 years our BFSI was industry leading growth, it was because we were differentiating with digital and customers were spending in digital. Digital is discretionary. So when this year, some of the banks pulled back a little bit on their digital spend to save money. So we saw that. Similarly, right now we are having a lot of penetration in the e-commerce space of the consumer vertical. So we are seeing industry-leading growth in the consumer vertical. So from a Wipro internal perspective, we feel good. At a macro level and as the industry-specific challenges come, hopefully we are lucky on the portfolio side of the equation. I feel quite good about
But
growth.
company-specific issues you're saying are largely behind
Yes,
you now.
except the India state-run enterprises restructuring that is happening. There also I feel quite good. It is on track. The India business for the private enterprises, which is part of the IT services segment, just to give you a sense, today our DSO, which is a metric of the quality of revenue, is now almost in line with our global business. So overall, I'm quite pleased. You saw the mega deal that we signed last quarter with ICICI Bank in that
The
segment.
green shoots are visible.
Absolutely.
Works well. Thank you all so much for joining us. Thank you.
Thank you.